Welcome to the Deep Dive.
Great to be here.
Our mission today is, well, to really dig into something fundamental but often debated in the markets. What is price, really?
It seems simple on the surface, but there's a lot under the hood.
Exactly. And we're going to explore this using some really insightful work from Sir Margin, specifically a piece called The Dual Nature of Price.
Ah, yes. A very thought-provoking piece.
It really is. Sir Margin kicks things off with this intriguing question. How can price, in the same market, be both a simple historical record of what happened?
Just a log of past trades, yeah.
And also this dynamic footprint of market psychology, reflecting all the collective hopes, fears, decisions of millions of people.
It's like trying to see the dancer and just the steps left behind simultaneously.
That's a great analogy. And, Sir Margin suggests that just focusing on one of these aspects, well, it creates a real vulnerability, an Achilles heel almost.
Mm-hmm. A definite blind spot. So we'll unpack the two main ways people look at price action, technicals.
Right, the charts and patterns.
And fundamental analysis, the underlying value stuff. And crucially, why Sir Margin argues for putting them together.
Yeah, why that synthesized approach is likely the more robust path.
Exactly.
Okay, so let's peel back that first layer. Price as just history. Sir Margin reminds us every point on a chart, it's just a record, a transaction that's already done.
Pure historical data, a fact that's already happened.
And chart watchers, technical analysts, they rely heavily on this. But the source warns that only using this past data, well, that can be the weakness.
Right, because just seeing a pattern repeat doesn't guarantee it'll happen again, especially if the underlying context has changed.
Markets aren't just math problems, are they? They're driven by real-world events, news, economic shifts, human emotion.
Precisely. Sir Margin emphasizes this. Just looking at the chart in isolation, say, it did this before, so it'll do it again. Right. Without understanding the why. That's where the fragility lies.
It's like planning a journey just by looking at an old map without checking the weather forecast or road closures.
Good way to put it. You miss the current reality.
But then, Sir Margin doesn't just leave it there. He pivots to the other side of the coin. Price action as the footprint of market psychology.
I really like that phrase, footprint of market psychology.
It's evocative, isn't it? It suggests price reflects the collective mind, the fear, the greed, everyone reacting to all the information out there at that specific moment.
And this is where the technical analysis proponents sort of argue that, well, all the fundamental stuff, news, reports, data, it gets absorbed by the market so fast
that it's already in the price. Baked in.
That's the essence of the argument, yeah. Which naturally leads traders, especially newer ones, to ask.
Well, if it's all in the price, why even bother looking at fundamentals? Why do all that digging into earnings or economic reports?
Right. And Sir Margin tackles this head on. He's not dismissing fundamentals at all. He clarifies their role. He says fundamental analysis studies the events that led to price being printed.
Ah, so it's about the cause, the underlying reasons. Evaluating the intrinsic value based on economic factors, financial health, all that.
It answers the why. Why is the market moving? It's the deep dive into the current, as you said earlier.
Okay, so that's the why, and then price action analysis. That's more about the what, where, and when, isn't it?
Exactly. What's happening right now? Where are the key levels of support, resistance, and crucially, when might be the right moment to act, or maybe hold back?
It's observing the market's immediate dance, its rhythm, rather than the reason for the music necessarily.
Perfectly put. And the source is really clear here. Relying only on one of these is asking for trouble.
Blindly following chart patterns without knowing if the company's about to go bankrupt?
Yeah.
Yeah.
Sounds risky.
Extremely. That pattern might look perfect, but if the fundamental ground is shifting, poof, it's gone.
And the reverse is also true, right? Knowing a company is solid fundamentally
Doesn't tell you the best time to buy the stock. Especially if the whole market's taking a nosedive.
The classic example. You do your homework, find a fundamentally amazing company, buy the stock, and immediately watch it drop 20% because of some wider market panic or correction. You were right about the what, but wrong about the when.
That immediate gut punch. Sir Margin's point, then, is fundamentals tell you what or why to consider a trade.
Mm-hmm. And price action helps you figure out when and how to actually do it, ideally avoiding that instant pain.
So this brings us to the solutions Sir Margin offers. Not choosing, but combining.
Synthesis, that's the powerful idea. He argues the best strategies don't see these as opposing camps,
but as complementary tools.
Yeah.
And interestingly, he suggests a sort of hierarchy in how you use them.
This is really the core of his insight, I think. You start with fundamental analysis. Use that to build your bias, your strategic view.
So the why. Why do I want to be long dollars or short this stock? Based on economics or company performance.
Exactly. That gives you your foundational conviction, your strategic direction. Okay, the data since this currency should strengthen. That's your bias.
And then once you have that conviction, that fundamental reason.
Then you turn to price action. But not for the why anymore. You use it for execution, for timing, for managing risk.
Okay, so you're not just randomly looking for patterns. You're looking for price action signals, maybe a pullback to support, or a breakout that align with your fundamental view.
Precisely. You use the chart to find a good entry point, a logical place to set your stop loss to control your risk, all within the context of your underlying fundamental thesis.
It becomes a tool for precision, guided by that bigger picture understanding.
In this model, price action isn't the sole driver of the decision. It's the refined instrument you use to act on a well-researched idea.
So it stops you from, say, buying something just because it looks cheap on a chart, or selling because it looks expensive, without considering the momentum or the fundamental story.
It marries the reason with the rhythm, the why with the when.
Okay, let's bring this home then. The core takeaway from Sir Margin from this deep dive, what is it?
Well, I think it's that while price action alone, in a vacuum, can be misleading, that Achilles heel or path of failure he mentioned.
Because it might distract you from the real drivers.
Right, but its role completely transforms when it's integrated. When you use it for timing and risk management within that broader fundamental framework.
Then it becomes, as he puts it, an indispensable part of a successful trading career. Not the whole picture, but a crucial piece.
It powerfully underscores that the most robust approaches don't force a choice between fundamentals and technicals. They weave them together.
Use fundamentals to form the bias, the why.
And then use price action for the tactics. The what trade to take, where to enter and exit, and when to do it. Execution and risk management.
Conviction meets action.
Nicely summed up. And this leads to a broader question, maybe something for you, the listener, to think about. Where else in your life, in your learning or your decisions, might you be treating two ideas or pieces of information as if they're competing, when maybe they're actually complementary?
Like seeing things as either, when they could be both hand.
Exactly. Think about how bringing different perspectives together, like the why from one angle and the when or how from another, might lead to deeper insights or more effective actions.
Even in areas totally unrelated to markets, synthesizing different kinds of knowledge.
It could unlock some surprising results.
Yeah.
Definitely something worth considering.